Make sure this gets connected. Connecting. All right. Resolution is there. Okay. Good morning, everybody. Let's see if this gets going. There we go. Okay, it looks like YouTube is going. It looks like Twitch is going, but we have an ad for some reason running. Oh, there we go. Let me change the, hang on a second. New market prep. Nope. Okay. I'm just updating some stuff. Sorry. Okay. Go. All right, guys. Let's go ahead and get started. Taking a look at the E-minis, the S&P. We got a daily chart, and we have our 60-minute. So we have our bigger time frame with our intermediate time frame that we're looking at. Let's see, we have about 20 minutes before the market opens. What we're going to do today is basically go through our morning routine of setting up our charts, what we need it to look like, and then checking to see if there's any news coming out for the open and through the open of the U.S. session, and then we'll go ahead and find some levels to possibly look at getting some trades off. So you can see right now most of the major markets are up. Fairly decent size. S&P and Nasdaq are up the most. Russell's basically flat. YM is up about 0.5%. Bonds are up. Gold's up. Oil's up. Dollar's down. VIX is down. So we had the midterm elections last night. Looks like the Democrats got the House, and Republicans maintain control of the Senate, and a lot to do about nothing. You see the market popped up overnight, made a couple moves up based on that news and that stuff that was happening last night. So we got the reaction to the upside, and now we'll see if they want to continue this push back up towards 2,800. We're about 23 points away right now. Or do we want to get a pullback before we move higher? Let's take a look at the daily and start organizing our chart, updating it a little bit. Let's zoom in. All right. And what we're going to do is we find the overnight high, and this is based on Globex 24-hour candles on the continuous chart on TradeStation for the E-minis. So the overnight high is just the high of the candle right now since the U.S. trading hours haven't started. The overnight low, designated by these purple lines that we use, is going to be the low of the candle, right? Yesterday's high was 61. We're right there. The low is right here. If I can click out of that. I was doing that. 29.67. 29.75, excuse me. 29.75. Get these lines all situated here. All right, okay, and then two more pieces of information that we want to look for and keep an eye on just to help us make decisions is the open of this candle, which is 2756.75, which which would just be at the base of the candle. A green candle is going to have the open at the bottom, obviously. Now sometimes people get confused. Previous close is at 59, so we could just type that in. We don't even have to drag it. 27.59 on the dot. Okay. So that's basically what we do to start our day. Oopsies. Let's see here. 87 is the overnight high right now. 27.87. Okay. Overnight low. 44.75. All right. So we have that up and ready to go, guys. Now let's take a step back. So this is the information that we need to see relative for today compared to yesterday. And then we want to take a look and see where we're at bigger picture. This is basically going back to the beginning of the year right over here. Oh, excuse me, right here, a little further. But basically, you know, we've really just been in a big old range. Made lows down at 25-30 area, rallied all the way back up this entire year. Back up above 2,900, sold off, came back to close to the bottom of the range, down to this 2,600 area, and now we're bouncing back up, and we're in the middle of the zone. Middle of the zone, meaning if you're going to split this chart up into 3 areas, right? We are dead center in the middle. And why is that important? Well, as you can see, lots of trading activity goes on in the middle of this range, which means that these price points in between the zone that the ES is traded in aren't the greatest or highest probability. The higher probabilities of turning points are going to be at the extremes. And that's just how range trading occurs. You know, it's going to trade back up to the highs, get close to the highs, sell off, come back to the lows, get close to the lows, and rally up. But when you're in the middle, you know, things may not be as clear cut in terms of direction and what we want to do. And so you can see when the market sold off pretty hard in February, it had a couple attempts initially to rally back up, tested the lows twice, and then made its way back up, where it was trying to test the highs a couple times before pulling back. So we've put in the low, it looks like, right? Let me get rid of this. And so we put in the low here, we put in the low here. We're in the middle of rally mode. This is rally mode. We may move up a little bit higher than this 2,800 area, and then you'll see a pullback with a possible another retest at trying to get back towards the highs with a further pullback down into the lows again. So that's kind of what we can see happening at this point, just based on looking at this year's activity alone. But you can see this type of stuff going on any time frame. It's just a matter of, you know, what time frames are you trading on? And for us, bigger picture is going to be the dominant time frames for us. And so we're in an area right now, big round number, 2,800. You have a decent sized move to the downside from this area. You got some selling candles, some selling pressure with these wicks. And the only issue with this is, you know, it's been here multiple times, traded up through, traded down through, and broke down. And so realistically, this thing could pop up above 2,800. We get a strong enough move today that may get us close to that, where you can see this daily candle right here, this wick with the high of 2,850. That could potentially get taken out, and then you can see a reversal. What the market likes to do is typically take out previous wicks or highs or lows and then reverse. And so that's a possibility for us because there is potentially some selling pressure in here on the smaller time frame. We just have to go down and find it, and that's what we're going to do next. But I wanted to give you guys a bigger picture of what we're looking at here. since we're going to be aggressive in trading on an intraday basis, it's okay to be in the middle of the zone in here. We just have to go down to those smaller time frames, right? Uh, but if we want the better opportunities, then we're going to have to wait until we get back to one of the extremes, either the high side or the low side, right? And so barring a, pretty decent sized sell-off today, I don't think we're going to get back towards the lows, nor do I think we're going to get back towards the highs. So based on this daily chart, uh, which brings us to now going down and finding some opportunities on the smaller time frame, because bigger picture, there's not much for us to do at this particular moment in time. Now that may change as the day goes on, but for now, with about 13 minutes left in the pre-market, that is what we're looking at here. So let's go down to the 60-minute and kind of find something to lean on for a trade. As you can see, we have the blue line, which is the 50-day weekly moving average. That's the 50-day weekly moving average. Okay. And then the gold line is going to be the 200-day moving average. So we traded above that overnight. We traded above the high from, when was that, the second on Friday that produced this down move out of the 60 area. So we're above that, and now we're pulling back. We did have an area highlighted, so we're going to take a little scroll left here to see if we can find it. I had highlighted this, I think it was yesterday or the day before. We found this little pocket in here. So you have a top almost right here. Prices rally up, rejected, rally back to try and retest it, rejected, and then a further breakdown. After the breakdown, you see a rally back up to this area. You got a nice reversal and a continuation of the down move that actually produced a big move down. The first point of selling pressure that could come in would be right in this area. You see prices come down with a gap. It rallies back up, a couple attempts to get back at this level, up at this level, and it couldn't, and it failed for a nice big down move. So you have this basically pointing up into this area. There's a wick right here that is pointing up as well. When I say pointing up, I mean you look left and up to find some selling pressure, and then you have a pivot right in here. So you have a nice level, and we'll go down to a smaller time frame so you guys can see that, off a pivot or a turn in price. And so that's what prices came up to. Today we had a high of 87. So it got about halfway up into the zone, into this area, and then is reversing now. So let's take a look here, and I'm looking at the Russell, the NASDAQ, and the Dow, and they are all pulling back as well from some highs. So we're going to have to take a look at those and see kind of what the trajectory is for those guys. Coming down to this 15-minute chart, you have a little area right here above the highs, and this reverse, almost shooting star, hammer candle, whatever you want to call it. Prices rallied up, paused at the 200, and then shot up again another 12, 13 points. So prices coming back down in this area. This may be a spot for prices to launch off and rally back up to start the day. But let's go back left and see. You can see price came up into this zone, this 87 area, and let's see what it looks like. Yeah, it's right in there. So basically what this is our little area. Sorry. You can see prices dropped, rallied back up. This was early morning, right around the start of trading on the 19th of October. Prices fell off, consolidated, and then dropped off further with a couple attempts to try to get back above this 27.85 area. It couldn't. This particular zone also coincides with these lows right in here. And this was a low after this rally up. So you basically have an old support line is now turned into a resistance line. You combine that with this price action, and you get yourself a nice little level. And that's what we are seeing currently push this market back down. But like I said, we have this little speed bump right in here that could potentially be a launching pad for prices. We still have 8 minutes before the market opens. So ideally, we were looking for this 35 area yesterday. Prices couldn't come back down into that. But we were able to take some points out on the short side. And we're going to look to see if we can take some points out of the market today as well. For us, direction doesn't matter. We just want the right setup and the right criteria. That's what we're looking for. And so, yeah. We got, let's see, about 7 minutes left. Let me go down to a 5 minute just to see what's going on. Yeah, there's a spot right in here. Yep, it's coming in there right now to see if this will be a spot where it'll hold. Before rallying back up to these overnight high areas. The overnight high again is at 27.87. That's all the way up here is the overnight high. What the market likes to do, and this is just from being in front of the screen for so many years and watch the markets for so long. If we can't break the overnight high, what the market likes to do is go back towards the overnight low and vice versa. If we can't break the low, then there's a tendency for the market to trade back up and make its way towards the overnight high. So the markets are just moving from one area of imbalance to another area. And so, the price action facilitates that movement, but we're just trying to find those little pockets where it can be turning points. So, this is one of those little pockets. You have a nice rally up, consolidation, basing out, and then the move continues. And so this would be a natural point for prices to come back to on a pullback for us to retest up higher. The flip side of that is you see that we've been down overnight, right? We have this action. We have a nice down move. We're off about 10 points, coming into an area where on a 5 minute we have a zone, but on the bigger picture there's nothing really there. The bigger picture always is going to have more weighting than the smaller time frames, and so you could potentially have this be an area where we're going to break down further from. And so you do have this selling off, consolidation, and then a further down move right here. The move isn't that great. It's not that big, so the probability that this work is not going to be too high, but it could produce a further move down. If we're going to look at a short, I wouldn't really look at anything until you get above this 80 area. You have prices selling off here, right? Rallying back up. You have this reversal doji candle. Couldn't get higher than this 80 area and close higher than that, and then reversed lower. And so potentially we have something up in here based on this action and this action. You got prices breaking down, trying to rally back up, can't get back up there, and then comes down again. And so we're going to see really what the market wants to do at the open. The other major markets are, like I said, they have pulled back, but it looks like they're pulling back into what looks like decent demand. Most of these markets look very similar right now, even though the trading has been off the past week or so. You have the Dow up with everything else down. You have the Nasdaq down 2%, and the S&P and these other markets are flat, and so um, there's been some mixed days, which is just indecision and rotation from certain sectors into another, and so um, it looks like everything is in sync right now, at least this morning. So that would bode well for any trades in either direction. If you take a trade short, you'd want other markets to be going down. If you went long, you'd want the other markets to be going up as well, at least the equity indices. So we got about 5 minutes here. Okay, came back down, barely touched it. Touched the top of the candle prior to this doji candle and has bounced. At least initially, let's see. Like I said, we have this reversal candle with a wick pointing up, so potentially there's something up here if the market wants to rally back up there to start the day's trading. We have 2 minutes before this starts, so let's take a look and see the cash market, SPYs and SPX. Going to open up as well. SPY is going to open up $2 higher. So we're at 2277.50. All right, we got about a minute before the market's open. $60-minute. Wouldn't look for longs unless we're below 65. Actually have this little area right here. Not the greatest looking thing, but rally, pullback, rally, pullback, rally. After this pullback, strong rally up about 25 points. Yes, it was created overnight, but that's okay. There we go. We're off. Let's see what this market wants to do. When we get our setup, we'll put on a trade. To a smaller time frame to trade the open. So cash is opening up on a gap up. Let's see here. Oh, using Thinkorswim to look at the cash. So it broke above this. Now we're right in there. Waiting to get a little bit higher. So this is the same level that we're looking at on the ES, guys. This 2780 to 2786. It's on the cash market as well. We're about 3 points away from hitting that. That is the level that we like. So let's see if we can get up there. We're about a point away. That would put this thing a few points higher. What you can also do is look for SPYs or SPX. Let's say we wanted to take a short position. You can look at the monies for today's expiration on SPYs. They're going for about $1 right now. That's the 277.5. So you're basically in the money. 278s would be in the money. 277.5's out of the money right now. But let's see what the market wants to do. If we want to rally up a little bit higher and get into that zone that we had identified. Lots of trading behind it, so that's the only issue with that. But it is an opportunity. There's not going to be a lot of volume up there. Let's see here. Yep, S&P is in it right now. SPX at least. Just trying to get the right picture for us, guys. Maybe that's it right there. Right in there. So it hit it to the T7181. You have a rally up out of this breakdown. It attempted to rally back up to the highs. It couldn't. It broke down here further with a big strong move down. Retest up there. Couldn't get up there. Now it's retesting again. Actually hit the zone this time. So we'll see if it wants to move up in there a little bit. And then we'll look for the reversal. The confirmation. Get the confirmation. We'll get in. Confirmation is going to be a smaller time frame candle pattern that we look for. Just refining the zone as you go to smaller time frames can help sometimes. Not a lot of volume that you guys can see up here in this overnight trading area. Most of the volume is at 79.25, at least initially right now. Some more volume down below. The 60s, excuse me. That's where price was at when the elections were going on most of the time. So, not surprising we're getting lots of fills down there in that 60 area, 65 where it broke out from to the upside. Let's take a look back here and see what we got going on. The other markets are rallying at the moment up from their slight pullbacks. Let's see if we can hold it. So what we look for, guys, is an area of either demand or supply based on chart patterns and candle formations, where they're at relative to where prices have been, and then we're looking for signals on those areas with certain candlestick formations and patterns. So that's how we make our decisions. We simply are looking at chart patterns, technical analysis, and seeing what the momentum is doing at the time. We have other factors that we look at, moving averages, previous day high, low, open, close, Globex or overnight high and low. There are a few things that we look at in terms of data points, but we make our decisions based on where price is at. You can see that little 5-minute area worked out. It didn't quite come back down into it. It hit the top of this explosive candle or the bottom of this doji right here, and then proceeded to rally up. So about a couple ticks or a point away from where we'd want to get in on this thing. Let it come in a little deeper and then go up there, but it didn't happen, so that's okay. Now we're getting this opportunity in here. Let's see if this candle wants to reverse or move higher. We're getting looks like a little bit of a reversal. Trading is waiting. You got to be patient. So we're just going to wait for our setup to form and then get in. Looks like we want to go a little bit higher now. Yep. Gonna take this out. There you go. Let's move over. Bigger picture. Let's see. Got some wicks in here. See if that'll be enough to hold this thing back, at least initially. No, it's not. We're going for the overnight high. Let's see. The Dow is at its overnight high. Russell is climbing that way. NASDAQ is the lagger, even though it's still up. Volume's getting filled up here now. Still only 174 contracts at the 87 area. You get a nice surge of buying, then that's going to get taken out. There it is. Boom. Okay. Let's see. Well, they all got up here, took out the high. Other markets did not, just the S&P. See what it wants to do. It wants to continue to move up. Cool. Cool. So that little 15-minute consolidation area is the one that worked out. Didn't quite get in there yet, to our level. I wanted us to see if we can get past um, or get back into the origin of this actual candle down here at the 7250 area. It just didn't materialize, and so it popped up. And now we're waiting for our next opportunity. Let me go down to a smaller time frame off of this daily and see what this can show us. Had a nice rally back off the lows. We hit 2603. Now we're at 2785. 2785 minus 2603 is 182 points. Oops. 2603. It's about a 6% move that we've had off the lows. So, at what point do we get to the oversold areas? Or overbought, excuse me. This was just a couple areas that we identified on this 240. Let's see here. Yep. So price is having trouble getting over this thing in here. Got a couple attempts to rally up above 80 and stay above 80, and it has failed. But there's a ton of trading that's going on in here. So we really wouldn't look at that as seriously for supply or selling. You go to a smaller time frame, like we talked about, and then you can find opportunities. But ideally, you'd want to see this whole area get taken out and come back up above this 2820 area to look for a bigger opportunity, better opportunity short. You had some opportunities earlier on when prices were back at this breakdown point, right around 2760. We had this bigger opportunity short. But other than that, most of the better opportunities are coming on the long side, even though it's maybe difficult to continue to buy given all the weakness that we've had, given the news, et cetera, most people find it difficult to start buying this market back up. Um, you just got to look for the right signals and know your signals, and then you can take advantage of it. So, bigger picture, like I said, there's not much for us to do at the moment, unfortunately. We'd want to see this get taken out, or at least this pivot get taken out at 850, with potential of getting stopped up by this top over here above 2800. Other than that, you're going to look towards 2760 for long, just based on this time frame. These bigger time frames are better. Most people think that if you're going to day trade, especially futures or stocks or penny stocks or whatever it is, that smaller time frames are the only way to go, and that's just not true. It's just not true. What happens is when you get down to these smaller time frames, you run into the issue of getting stopped out a lot, because these smaller time frames aren't actual true turning points. It's a lot of times noise, and so getting stopped out is going to be a more frequent occurrence. If you're on smaller time frames, you're going to see more setups. More setups are going to translate to more trades with potential for more stop outs, because these smaller time frame trades don't work out all the time unless you're in the context of the bigger picture. And that's where most people get caught up. They go to a 5-minute and a 2-minute and a 1-minute, and they have no idea where they're at relative to a daily or an hourly chart or something like that. And so that's where you can run into issues, where most people do. And it just makes it very difficult to be consistent. So we're putting in this reversal right now. It looks like potentially that's forming on the 240-minute. This is definitely not bullish. Now, if this closes above, where are we at on this? 83.75, and this turns into almost a hammer candle, and closes above this high, above 87, then that would change the situation. But right now, this doesn't look that bullish. And remember, we always want to be bullish on the equity indices. It's just a different degree of bullishness that we can have, and that'll translate into putting on a position or not putting on a position, or staying short or out of the market. But for the most part, we want to look to be bullish. But in this case, our bullish price isn't all the way back till 60. So what is in front of us is potentially a shorting opportunity, just because where we're at in the chart. We're in an area where prices could not stay at and had to go lower because there was more supply than demand. And so we're back up into that area. Let's see if that will translate into similar action that occurred previously. So we got 645. Got a nice big wick up here. Let's see how that translates into this next candle. You go down to the 10-minute, you can see that we're reversing after taking out the overnight high. Let's see here. Yep. So on the 5-minute, that's why we go through multiple time frames. We want to filter out the noise, and we also want to find the actual opportunities. So on the bigger picture, you can see this candle is just moving back and forth. You can't really tell what is going on, except the fact that it is staying weak and it is staying red. You go down to the smaller time frame, and you can see that after this high we put in this bearish candle to follow, and now this next candle is working on a continuation of that reversal. So we'll see what that looks like here in the next few minutes. It's going to materialize in one direction or the other. We're up 23 on the ES right now. We have about 20 points to the downside in terms of profit margin on a short up here. This was the origin of the explosive move up, this big candle up off these highs. So this was almost like a reversal of a resistance becomes the new support. You have the consolidation, and then you have this huge expanded range to the upside. So So that would be a nice area for at least a target on a short and or possibly get long based on the market wanting to stay positive, coming back down to yesterday's high. Uh, this area looks ripe for a bounce. So the market, typically what it likes to do, again, if it can't break or stay above the overnight highs, it'll come back down to the open. And if that can't hold, it'll come back down to the overnight low and vice versa. So once you guys start to understand how the markets move and where they're moving to, it makes trading a lot more clear, if that makes sense. You can see, what the market may want to do. We never know what the market is going to do. Nobody does. Anybody that says they do is full of it. But you can, with a higher degree of certainty, a higher degree of probability, find setups that work out more often than they don't. So that's all trading really is when it comes down to it. Using technical analysis and chart patterns is just finding, the same looking pattern, candlestick, opportunity, formation, whatever you want to call it, and then knowing that that's your signal and then getting in. Did we have any news? I feel like we did. Just crude oil inventories today for the U.S. Not much else. Yeah, not much else. Tomorrow, jobless claims, continuing claims. Tomorrow we do have the rate decision with the FOMC and the Fed. They're not going to raise rates, I don't think. They're going to save that until December, but nonetheless, there is a meeting tomorrow, and it may have some sort of reaction in the markets. Since there is going to be no rate raise, you could potentially just see that the market's choppy tomorrow. May just be choppy going into today or going into tomorrow today as well. So it's just something to pay attention to. Don't necessarily care what is going on in these reports. It's just good to know where they're at and what's happening. Friday looks like a bigger day in terms of news, but nothing that impactful besides the rate decision. But again, they're not going to do anything, so we'll see how that impacts the market. Seeing some further pressure come in. Russell's actually pulled back from the highs and is lower than its most recent low, back at 1561. The candle actually turned red. You're getting a reversal candle on the cash market as well on the hourly, right above that area. Yep. So let's see if this thing wants to hold. Extended. Okay. Let's check spies. Are we getting the same kind of pattern? Yikes. It's overnight. Hold on a second. Okay. Yeah. If this stays how it's looking right now, this reversal candle, this doji, you could potentially see the market come back down and do a gap fill. Although we gapped up here, spent a couple days, and couldn't fill the gap lower, this gap was filled after a week or two. Typically, gaps don't fill, gap ups, gap downs don't fill the same day, especially if they're big enough, but we've seen them fill a few times with this market and this volatility, so it's not out of the realm of possibilities, but we need to wait for that to actually form before we look to take that type of action. What's our hourly looking like? Honestly, it's looking a lot like this entire trading the past day, all this overnight. Rally up, pause, pull back, rally up, pause, pull back, rally up, pause, pull back. Doing the same thing here. Cutting through these highs, cutting through this old price action. Now we're into a point where we haven't really been in a while. This is going back to October, mid-October. And you see that we're stalling out a little bit. So let's see if this wants to translate into something longer term, meaning the rest of the day. Let's see here. Yeah, the Russell's still putting in that reversal. So this is the regular trading hours only chart. Basically like a day session only. And you can see we're coming right back up into this area and are selling off now. This candle should close. 7:30. So we still have 45 minutes to see where this thing wants to close. This would be a nice sign for a short with an anticipation of the gap fill, in the very least, to get back to these moving averages. Yeah, may want to do that right now. Leaving the train without us. Train's leaving without us. So the short is definitely the option. It's just where would you want to get in is the question at this point. How much risk can you take? How much risk do you want to take relative to the reward? The reward is 20 points away, okay? 15 points away. So if you're able to risk, less than 4 points, you're going to have 4 to 1, 5 to 1 risk to reward on this type of shorting opportunity. So it's just a matter of, again, where can we get in so we don't get stopped out? Because we definitely want to participate in this down move, and it's looking like it wants to move down further. So where is a spot that we can get in? There's two ways that you can do this. You can wait for a bounce back up, or you can put your order down below and then just do a sell stop below the low, a couple points or a couple ticks below the low. Definitely a much more aggressive way to trade is if you put an order below price and let it stop you into the short. With that though, you're going to take on more risk because you'd want, let's say you got short here at 76, 75, so that's basically 2.5 points from where this is at. And then you're going to have to put your stop above, probably this candle and this candle up here above 84. So you're looking at 7 points worth of risk, $350 for one lot on ES. That's a little much, at least for us. We don't like to risk that much per contract. Our wheelhouse is between 2 to 4 points in terms of risk. That would be ideal, 2 to 5 sometimes, depending on the profit margin. That's what it really comes down to. So now we're basically retesting the open, right? 630, 635. These two candles. This was the open candle. This was close of the first 5 minutes worth of trading. So we're basically retesting that. You see that on the regular trading hour chart only. It looked like there was nothing below it because it takes out all this overnight trading. And all this overnight trading really gets us back down to 2760. Now we have this opportunity right in here as a potential short, 81.50 up to 84. You got the rally up, took out the overnight high, reversed, and now has this basically move down, a pause, and then a further move down. And in here, prices can get hung up and then continue its move lower. So 81.50 first target would be back here at 75. So that's 6 points away, with risking 81.50 up to 84. That's 2.5 points. So 2.5 points. Your first target is 6 points. You're basically at a 3-to-1 on that trade itself right here on this 5 minute. Short up here. First target down here, 75.50. Second target would be back again, down at 61. Closer to 60. Markets are strong. Markets are up. You can see when we move up and have rallies in the market, a lot of the time demand will hold. Bigger picture, wicks will hold, so prices will come back down into areas where there is previous wicks, and it'll hold. And why is it doing that? Well, this is basically showing you that prices came up here, couldn't stay any higher, so they reversed. Prices next candle came back up here, couldn't stay up here, so they reversed. Then you finally have this candle come up and blow right through these two areas that prices got rejected from previously. Since they got rejected from previously, once price goes through those levels and then finally comes back, that acts as almost that old adage of old, support becomes new resistance becomes old support, kind of. So that's just something to pay attention to. All right, the 240 minute, that closed lower than the previous candle in an area that hadn't been touched. The overnight high was taken out, and so this is looking bearish to us right now, and we may not even get a chance to get back up here, at least initially. Just got to be patient. Let's check our other time frames before this thing comes back up. Let's see. Yep. Okay. We're in a okay area in terms of where our short is located on that 5 minute. You can see that that first 15 minutes worth of trading has that big wick and the reversal. Next candle, we couldn't get much higher. Barely got like 25% into that wick and then reversed. And so if we were able to get back up there, that may produce the further move down that we need. What could happen if the markets want to stay strong, they want to stay above this 200-day and the 50-day, then what technically could happen is you could see price hold this wick here in this 240 and then continue to rally up and put in another high candle, because there is possibility for us to move up higher. There is definitely some room, but we just need that buying pressure to come in. It doesn't look like it is, at least at the moment. Well, volume's decent. We're at 700,000 contracts at 7 o'clock. So the volume is there. It's just, is there enough volume to continue that move up. The other markets look like they're bouncing a little bit. Nasdaq's heading back towards its overnight high. Take a look at the 60-minute. You do have a bullish candle on this hourly right in here. Took out this overnight high. That would make me pause on the smaller 5-minute chart entry that we had identified just a few minutes ago because of this bigger picture. In terms of the wick, this wick basically cleared out everything to the upside, giving us really a free movement up past this area. We'll see if that's the actual case, but that's what we look for when we see these wicks, where you have a pullback. You got 3 down candles, indecision candle, and then you got this candle that rallied all the way back up, got pushed back down. It still closed higher than this previous candle. Now you have this candle, this next candle that we're on now, opened higher than the previous candle prior to that, and it looks like it may want to push back up towards the highs. Nasdaq is going back up towards the highs. Russell's trying to hold, and the Dow is looking very similar to the S&P. So just waiting for things to shake out a little bit here. Back to this 5-minute. Hit it to the T. 8150 on the dot. Another scenario is, and this is what it looks like may be happening, darn. Yeah. Thought we'd get up there a little bit higher, but we didn't. Your rally, your stall out, and then a reversal. Price is coming back up at least 50% into this candle body, and then it's going to make its way lower, and that's kind of what it's looking like it wants to do. Let's see if we can get back up into this 8150 area real quick. Before things start to pull back further. It may not happen. We may have missed it. Darn. Yeah, we're back into it. Dang. See the cash is selling off too. The lows. We got plenty of room to the downside. Take a look and see. SPYs. 277s are 90 cents right now. So 90 bucks for a potential $2 move. Delta on this is what? Basically 50. So you'd capture $1, which would be about 100% return if this thing moved $2. I don't want to buy it at the lows. Let's see if we can get at least a little relief back up, pop up. We missed it on the futures. Yeah, you can see that 5-minute level was on the cash market too. Came right back up in there. I thought we were going to get a little bit higher again, and it didn't. Guys, if you trade the ES, you can trade SPY and SPX. It's the same thing. Obviously, your levels and your pricing is going to be a little different, but charts should look the same. That's why you can go back and forth, and it doesn't matter. Yep, right there, that little bugger. Just a little slow to it. Maybe this will hold 73.50 and get us back up there. Reason I'm not going long here, reason we're not going long here is because it worked out initially already, and now it's coming back down into this bigger picture. We have a gap fill below, so this isn't the greatest of opportunities. If this was the first time that this was getting hit and we had some nice demand below it and not a gap, then that would change the situation. But because of those other factors, we're going to just wait for this to either hold or get violated through. Again, the 2760 area is down here. That puts us at the open, the previous close. That's what, 15 points away. Yesterday's level I really liked was down here. 2753. Don't think we'll get down there today, but 20 points, that'd put us down 3 points on the day. That out of the realm of possibilities. That's for sure. This market has nice realized volatility, so the markets are moving. You guys have any questions or anything like that, just feel free to put them in the chat. Sometimes I go radio silent and we're just watching the markets, so if you have any questions or anything like that, now would be the time to get those out there. Just filter down through the time frames, see what we got, what it looks like on each of these. I mean, you take this wick out on the first, 15, 30 minutes of trading, and then we're just basically range bound. Not the greatest of trading right now, but it's only 7:10. We're about 40 minutes into the open. So there's still plenty of day, plenty of opportunity. Hasn't quite gotten to our spots yet. You could have gotten filled up here at this 8150, but who knows? Even if you had your order at 8150, it doesn't mean you would have got filled. It's got to trade through price with a limit order for you to get filled, to guarantee a fill. So just because you have limit orders out there doesn't mean that you will get filled. It has to trade through your price in order to, fill you with a limit order. So it makes it seem like sometimes you'd get filled on certain opportunities, but in reality you may not. Which is okay, because there's an endless stream of opportunities in the markets, in all different markets. We're looking at one particular market today, the ES, and there's plenty of opportunities. So. Got a hammer candle out of this area. Not surprising to see market bounce off of that. Cash is coming back up as well. Cash candle will close in about 17 minutes. So that's going to give us some better information as where this market may want to go. Yeah, definitely lots of room to the downside. Yep, definitely. Nasdaq back towards the highs. Dow's trying to rally. Russell's rallying up a little bit. It's getting there. Getting there. Doesn't want to do it. All right, here we go. See if we can get a little pop up in here. Potentially put our order, right around this 83 area. We could wait until it gets back up to the highs up in here. There's another possibility. You got a couple levels on each other on a smaller time frame, guys. So if we think that the market is still wanting to go down, in this case, since we have a gap fill below, we are in some supply above, right in here. Not the greatest, but it's there. You know, you can come down again to these smaller time frames to find the picture that we're looking for to get into these things. To take this lower. Nasdaq's making new highs. It's breaking out. If it'll pull back now. That's what the market likes to do. It'll get people in, and then it'll take it out, take out a high or take out a low, trap people that just got in, and they have no choice but to get out. When they get out, then it reverses. That, you know, can really frustrate people. We'll probably trade back down to this 80 area right now. Bounce up above. See if we can get above 83. Down hitting that wick right now. Boom, boom, boom. Boom, boom, boom. Okay. Leaving without us again? Come on now. Bearish looking. So we rallied up after a doji candle into the area of supply, potential supply. It took this high out, this previous pivot high. I know we're on a small time frame, but again, the action and it's the same thing. It's just bigger time frames tend to work better. But you can come down to the smaller time frame and see the same thing happening. So we rallied up off the lows, right back up into an area where there was selling pressure. Why do we know that? How do we know that? Because a candle and a wick was produced right here with a move down. We came back into this area again, took that out, came into these wicks, and basically this consolidation paused before another down move occurred. And we came back up in there, set this high candle, and then this next candle after that was the reversal, and it's going to be a continuation of that. At this point, you could put your order in here with a stop above this high, so 79.50 up above 82.50. But to us, that's taking on a little more risk, even though you do have the higher probability of this just continuing because of this action. But a better probability trade would be up above these highs in this area, because that basically is clearing out more profit margin for us. If this was to get back up here and go up higher, then everything down below is already cleared out because we've already traded through it. And so if we can get up a little bit higher, then the profit margin is going to be much better for us. That's why we wanted it to get above this 83 area in here. The higher it can go, the higher you can sell something. Obviously, the higher profit margin potential you're going to have. So we're coming back in there now. I can't even finish a thought process sometimes, and then the market moves in in the direction or opposite direction, and then it's like, all right, well, there goes that point. Yeah, these are long wicks in here. Yeah, this is a 2-minute chart. Let me get off of that. That same 5-minute spot that we had found that we liked. Other markets, basically are just sitting where they're at. A few points within the open. Nasdaq's the one that really rallied up. Sitting at up 100 right now. But it took out its overnight high. Let's see where it's at. It's still dealing with some wicks and a zone. Up above 71 quarter. It's kind of where we're at now on the Nasdaq. We'll see if that wants to push up, if all these markets want to push up a little bit higher. Yeah, just indecision. Indecision. Hits a little demand zone, rallies up. Hits a supply zone, pulls back. All within, 5 points. Tight little range that we're in. We've been in. Looks like we want to move higher. Nasdaq staying strong. Russell's starting to move its way back up. Dow again is very similar to the S&P. It's actually lagging the S&P a little bit. There we go. Getting above here. Coming to the top of these candles. There it is. See if we can get up higher. Cool. Oops. Candlesticks. That's not going to work. 3 minutes before this candle closes. Interesting little candle formation, or where we have it, what's happening. Up 23 and a quarter right now. 7:30's coming up. We're going to get our reversal. big candle on this hourly from 75 up to 87, so it's about 12 points. Decent low range. I'd like to get a trade fired off before we close down for today, guys. It's been a little tight on this. Little small opportunities happen quick. Haven't been able to get in there yet. We're waiting for our bigger picture time frame. I want to see what that can do for us. We'll be looking here to take this thing short. If it shows us that signal, if it wants to move higher, then we'll look and wait for pullbacks to hop on board. You throw in there with an expiration day, since it's Wednesday, both on SPX and SPY, you have the option on options to trade this the same way based on these chart patterns, just using options if that's what you like to use. So we're going to probably do a combination of both. It's just a matter of what. Decision. Got two gaps to fill, really. See if they can get filled. Definitely, probably. Most likely it's not going to happen today. This 2760 could definitely happen today. The much lower gap below 2700. Very low probability that that would happen today. That would be an 80-point sell-off, 100-point sell-off. Don't see that happening. Something, news-wise could come out that could produce that type of move, but that's not, number one, realistic. Number two, it's not a high probability, so not something to bank on. At least today, bigger picture, you can have that as an area where you're looking for prices to get back to, but interesting. Gap right here. Very weird. Below this hammer candle, above this wick on this down move, there's a gap at this 2810 area. Yeah, I know it's the regular trading hours, but that may be of significance at some point. I don't know if it will be today, but possibly it could. This is looking a little more bullish now. Nasdaq's really rallying up. Yep. Short may not be the way to go this trading session. Oh, 15. Get back to the regular session. Yeah. I see ya. I hear you. Got a reverse hammer out of the supply area. Targets down below. It's on the 2 minute, so it's not the greatest, but you are seeing potentially, signs of selling pressure coming in. Based on this trading, though, it looks like it wants to move up a little bit higher in here before potentially reversing. Let's see what this wants to do here. We got to wrap up soon. Take a look at the cash. What's the cash doing? That had a basically green candle up. Hitting the higher side of the zone right now. Other markets are looking strong. NASDAQ specifically rallying back up towards its highs. Up a buck 15. We got a few minutes here, guys. If this isn't going to materialize, then we're going to have to just go without a trade today, at least in a live stream. We'll get back at it tomorrow, maybe. Or Friday, actually. Friday would be the next day that we're going to stream live. Not a lot of volume up here, so it's a good thing. 650 is the top of these wicks. This would be a retest of the high on the day, regular trading hour high. Retested the lows, that held. Yeah, it looks like these markets want to continue to move higher. Other markets are moving up. I'm not trying to get in front of this thing in terms of a short and get stopped out. It did hit our level, but it's bullish candle after bullish candle until we see reversal, a sign of a reversal, and we're on a 5-minute and we're still not seeing it. So um, that's gonna be it for today, guys. Unfortunately, we got to wrap up. Markets look like they want to continue to push up and be strong on the day. If you're looking to get short, just wait for the confirmation. Confirmation would be taking out previous highs, taking out previous wicks on bigger picture, and then on smaller picture, getting those reversal candles, reverse hammers, shooting stars, dojis. Wait for those things to occur and close, and then you can find your opportunities based on those particular patterns. Um, Make sure to check out the daily recap. We're going to have that going out later today as well, guys. And I appreciate you stopping by and checking us out. We're going to be doing this live stream again on Friday, trading the E-minis, specifically taking a look and trading the ES is what we focus on. But we don't shy away from other markets as well. We'll take a look at SPX and SPY on the cash side of things. Yeah, the Nasdaq's really rallying up now. We're up 125 points on this guy. All the other markets have not broken out of their highs. S&P is going to be the closest one. Dow and Russell looks like they want to follow. So we're not going to go ahead and even look at this opportunity as a short. We're going to wait for something else to form, but that's going to have to wait. So, like I said, thank you guys for showing up. Thanks for watching us today. If you have any questions or concerns, feel free to email us. Jeff@simplyderivative.com or info@simplyderivative.com. Be sure to hit the subscribe button on the YouTube channel. You can follow us on Twitch and follow us on social media as well. Like I said, we're going to do this on Friday, bright and early in the morning, and go through the first hour or so of trading and maybe have some better luck on Friday with getting a trade fired off for you. And we'll go from there. All right, guys, have a great day. Good luck trading, and we'll see you next time.